Good morning and welcome you all to Narnolia Securities Weekly Market Outlook. Nifty last week closed up by 1.46% at 6261 levels. Inflation based on WPI eased to 5-month low at 6.16% in December 2013 versus 7.52% last month. The figure was way ahead of expectation of 7.1%. Fall in inflation is what the street has been expecting desperately, as it gives rooms to RBI for easing interest rate, which is a necessity for many bleeding debt-laden Indian corporate. Hopes of reduction in interest rates, Sensex trading at 12-month forward price to book of 2.36, which is below 10-year average of 2.7. Indian market to GDP at 62% for FY14 expected versus long-term average of 69% can build base for rebound in Indian stock market. As regards Sensex earnings are concerned, we expect Sensex third quarter FY14 PAT to grow at 13% year-on-year, which will be highest in the last 6 quarters. Amongst results declared last week, Reliance net revenues grew 10% year-on-year while profits remained flat. Our fair value estimate for Reliance stands unchanged at Rs 950. ITC reported better than expected results. Sales grew 13%, led by healthy growth across all segments. PAT grew 16%. EBITDA margin was up by 50 basis points at 37.6%. At the CMP of Rs 325, the stock trades at 8.3 times FY15 expected price to book. We expect price target of Rs 380. Bajaj Auto reported 6% decline in sales and lost over 3% market share in third quarter FY14. Company maintained the EBITDA margins. Our fair value estimate for Bajaj Auto is Rs 1870. HDFC Bank's profit grew by 25% year-on-year to Rs 2326 crore on the back of 22% year-on-year growth in NII and 19% growth in other income. We value bank at Rs 760 per share, which is 4 times FY14 book value. Axis Bank reported NII growth of 19.6% year-on-year and better than expected PAT growth of 19.6%. We revise our target for Axis Bank to 1217 from earlier 1147, though we maintain a neutral view on the stock. TCS reported inline set of numbers. Dollar revenues grew up by 3%. INR revenue was up by 1.5% sequentially. PAT grew by 15% quarter-on-quarter. EBITDA margin was down by 20 basis points to 31.4%. We continue to be positive on demand environment and company's strength of efficient deal execution. At the price of 2216, it is trading at 20.3 times FY15 expected earnings. We maintain buy with a price target of Rs 2510. The price target has been revised upwards from Rs 2360 earlier. HCL Tech reported stellar figures. Sales grew by 2.8% quarter-on-quarter. PAT grew by 5.6%. The company continues to lead the industry in profitable growth with 11 successive quarters of net income margin expansion, having reported 55% growth in net income on yearly basis. At a CMP of Rs 1392, the stock trades at 17.5 times FY14 expected earnings. We retained buy on the stock and revised our target price from 1194 to Rs 1560. Next week, Asian Paints, Ultratech Cement, Kotak Bank, HDFC, L&T and KN India will be declaring their quarterly numbers. HDFC is expected to report 14.5% PAT growth, while Ultratech is expected to report 47% PAT degrowth. Thank you and wish you a good trading and investment week ahead.